Say it again. 3 times you're right.
Now, would TechLaunch be interested in a business that is predominantly, say, business service or product that through technology would really help scale it? I mean, have you ever evaluated a business in that terms? I'm just curious.
What I'll fall back on is you have 12 weeks to do an investor pitch and to do a demonstration.
Okay.
So then the real question is, what type of, because it's technology, so what type of technology can you do in 12 weeks, okay, and do an investor pitch? I mean, it's really a boot camp. It's concentrated. So the reality is it's mobile apps, it's social media, okay, and that doesn't matter whether you're male or female. There's no distinction there.
So it doesn't really matter if you're starting off with a product-based business, as long as that technology component can help you really accelerate.
Yeah, very
Thank
much.
you.
Yeah. So.
Can I ask you a question there too? I'm curious about your definition of the word growth. Like, I've spoken to banks, and growth is a number or a percent, and it's very specific. But if you're earlier stages of business, you could have a huge amount of growth without it necessarily being a large number of financial growth. Is that viewed a little more with angel investors?
Angel investors are usually pre-revenue or just about revenue. We do like some revenue, okay? So, but it's usually pre-revenue, but it all depends on the appetite of the angel, okay? So growth, what's really growth? It's measured by how many clicks you've gotten, how many users, okay? Because it's early. Banks, the thing is, if you're a seed stage or early stage type of company, you try to go to a bank, most likely you will not get financing from a bank. If you want to do a home equity line of credit, then you need a resource to, okay. But usually a bank doesn't, at that early stage, okay. On growth, now you're already generating revenue. You've got some profitability, okay. So there, you've got maybe a year, 2 years of trailing revenue, trailing profit, then maybe at that point, a bank would be interested in really talking to you. Then what's growth? I mean, is it 25, is it 10% a year, 25% a year? It all depends on the business. Okay, I don't know if that answers your question. You want to?
Yeah, pretty much. I mean, again, we're all
Help?
kind of personalizing.
Is that happy with the question? Help?
I mean, I can just tell you from my experience, I've never ever gotten money from a bank. Because when you need it, they won't give it to you. By the time you don't need it, they're happy to loan it to you. So if you're going after a bank, think you always need some kind of collateral, right? And by the time you've got, let's say, in the business I've been in, it's been my receivables. And at that point, I was able to self-fund my receivables or call clients up and say, listen, I can't wait 30 days. Can you pay in 20 and kind of wheel and deal a little bit. But to me, bank is more, you're buying a large asset. You've already got large assets to leverage against and things like that. So I don't think a bank. I don't. When I talk to entrepreneurs, I say don't even waste your time. I know it sounds awful sometimes, but there's a huge process involved, and you spend a lot of your thought time and actual real time by filling out applications, going to the bank, and 99.99% of the time, it's not for what I call the modern day business.
I read on the SBA website recently the statistics. They look for minimum 3 years, $3 million in revenue. And how many entrepreneurs have, I have $3 million in revenue, I don't know if I really need a bank loan. I mean, and that's part of what's, I think, drowning out and strangling the entrepreneurship of this country. And that's where angel funding is becoming so vitally important.
To add on to Vaughn's question, maybe it's what are you guys looking for? Like the bank is looking for cash flow and collateral. What are angel investors looking at?
What I want to do is just go through this briefly and then just let the rest of the panel go into it. So I apologize, okay? By the way, advice, start a relationship with a bank before you need the bank. All right? Always start the relationship before you. Okay. So what do angel investors do? I mentioned founders, financing, friends and family, venture capitalists, right? What we do is we bridge the gap, okay? We bridge the gap between friends and family and VCs.
Do you have a bias?
Of what? Of what? These? No. I have a lot of very good-looking VCs and very good friends. Okay. So introduction to investors. Best way to get to the angel up here, okay, is you're the entrepreneur. You need an introduction. Bank, VC, professor, accounting, law firm, internet is probably the worst kind of referral you can get into an investor on the internet. Okay. Best type is you have an accounting firm, a law firm, you have an angel that likes your idea. It's a referral. That's the best way to get financing. A one-page executive summary, and then 10 to 15 minutes presentation. Oh, okay, good luck, I'm done.
Excuse me, do you think we can get a copy of the slides that are presented?
Oh, the cartoons? Of course.
I love your chart.
There are, did everybody get a copy of the next round of slides?
It's on there already.
You got one. Good. There is for mine, I brought copies. Does anybody want to see them? I'm Liz Siggety. Just a little bit more background on me. I don't have it on a slide, but I guess I have three major roles in life. I am a partner at Fox Rothschild, which is a national law firm of 550 or 600, I don't know where we are, lawyers, coast to coast. I practice in two practice areas. The one probably most relevant here is the tech and venture capital emerging company practice area. I have a lot of really young startup type clients. My firm has tried to build an ecosystem where even though we're a huge firm, we're able to service those clients. We have certain, special billing arrangements and other types of resources we give to our, not young in age, but young in company growth client, what I call a seed stage type client. The other thing, I am the co-chair and founder of Practice Group, Franchise and Licensing Practice Group. That is another model. It's highly regulated, but for growth, for people who don't want to have employees across the country. So that does often meld, especially in the hospitality industry. I do a lot there. For the franchising. The thing is, I am founder and co-chair of Delaware Crossing Investor Group, which is an angel group that is located in both New Jersey and Pennsylvania now. We have a headquarters in Bucks County and in Princeton. We are very familiar with Jumpstart New Jersey and hope to syndicate with them shortly. And I'm very good friends with Catherine O'Neill, who's the executive director of Jumpstart. So many of these angel groups do work together for larger rounds of financing, and that's when they get to be more like VCs, I suppose, the devils. And I'm a mother of four, so indeed you can, though it's hard to do these things. I do want to mention one thing about something that happened to me last week about maybe why we're here. The women, are the women the same, different, better, worse, whatever? None of the above. I was on a panel about preparing for an exit, a much more technical panel, and the next day I was going to be speaking on is it a glass ceiling or a sticky floor? And my co-chair was an accountant, an older man, and he's like, well, what are you speaking on tomorrow? And I said, well, I'm speaking on is it a glass ceiling or a sticky floor? And he sort of looks at me like, okay. And I said, well, not the problem, but the interesting thing about women is you really have to know your audience because women are so different. I've spoken to women on college campuses. I've spoken to women like many of you here who are really just starting up their business or in a fast growth business. I've spoken to women CEOs who are way more accomplished than I am, and I'm really learning from them. And then he turns to me and I said, so they're all very different. And he's like, well, I guess that's different than men. I mean, all I ever hear at home is we're all the same. So, and if you think about it, maybe that's why there are so many women's conferences, because women, especially with responsibilities at home, which still is maybe more of a female-focused area, they're coming from so many different places, depending on where they are in their lifespan. And I think that's often why, I'm not saying men are all the same, that was a joke for the men in the audience, but nonetheless, I think the career paths of women are more often interrupted, coming from having different strains on them than typically men. I think that's starting to change, but I think that's one reason why we're here. So anyway, sorry about that. That was a little bit of an offshoot, but that just happened last week, true story. Okay, so am I doing this right? No, I'm not. Okay, we've done this, he already did a little bit of this, and I'm going to skip over this a lot. Just a couple things to add to what Mario said is super angels are often it's luck, whether you bump into a super angel or know a super angel. Often, once again, your lawyers, accountants, people you work with as professionals, other people in the angel community might know somebody who might be interested in yours. I know some super angels who like retail companies, but they don't always like to be approached, which is sort of, you know, maybe they want to be introduced, but they don't want to direct, they want a referral. They don't want anybody to call them directly. So they are, you know, sometimes it's luck on whether you find those super angels, those people that'll give you 6 figures just on their own. And just do respect that angels, it is their own money. And sometimes that takes time, and sometimes they're looking in their spare time. This isn't their full-time job. I have about 20 portfolio companies myself. I am an angel investor, but the reason people are in groups is because they don't want people to approach them directly. They want it to be filtered through the group. So you have to try to understand what you're going on. And I'm going to go right through this because Lily's already talked about it. One thing about getting angel investment, and I get this a lot from clients too, is your company a business or is it a job? And I think this happens when people are counting how many businesses and what percentages of businesses are invested in. A lot of people form a business, and that gets counted in the stats that the government puts out, but it's not really a high growth business that can become independent of them. So maybe they're a consultant and they formed a company, but it's really just them. And unless it's a friend or family or somebody who wants to come in as a partner, it's really not an independent business that if they left someday would still survive without them. So it's a difference. I mean, if the business is really a job, it's going to be hard to find independent, unless you're like a rock star or something, investors. But if it's a business where it's developing intellectual property and product, where if somebody came in and ran it someday, it would still be worth something. And remember, even though somebody else is coming and running, you still hopefully own a lot of it. So that's not necessarily a bad thing. So that's one thing to think about when you're looking for investors. If it's really just a job you've created for yourself and you've formed an LLC around it, it may be a little hard for others to understand that risk of, well, if you leave, what's left? You know, what do I have? So just a point that I think is really important. Okay. I'm going to go through all the different things you have to get ready to speak to angels. I think Christian's going to give it a little more color when he comes up, right? So the elevator pitch. The name elevator pitch was given because you have to be able to say it in an elevator between floors. You've gotten into that elevator, oh, there's that person you've been wanting to talk to. Can you say in 3 sentences what is really exciting about your business? And that's it. I mean, you can't go on and on. You're at a conference, and I have a lot of clients. There's a big conference in Philly in a couple weeks. I've got about 8 of my startup company clients coming to it. If you can't go up to the VC and say in less than a minute what you do and get them excited, they're tuning out because they're listening to 30, 40, 50 people coming up and doing the same thing. You've got to rehearse this. You've got to have it down. Easy to understand. Show your opportunity and value, and be energetic. I mean, you know, don't be flipping off the ceiling, but nonetheless, be energetic in a business-like manner. The PowerPoint presentation. Now, I've crowded this slide, so don't do this, but it's not too crowded. People come to our group, to Delaware Crossing, I'm sure, and they have a gajillion slides. You know, you want to have very well-focused slides. You're talking off of the slide. You have it up there, but you're not reading your slide. You know the slide, you're speaking to the audience, like hopefully I am right now. And you're using it as a reference. Maybe people are taking notes off of it. Hopefully it's stored somewhere where the angels can later on go look at your slides. But it's a guide for your conversation, and it's not too crowded. Now, I pass these out so you'll have notes for later, which is why I put, you know, all this part in. But you should concentrate on certain points, and this is going to be similar to the executive summary, which I'm going to talk about soon. In your PowerPoint, and this is my own pet peeve, maybe somebody will disagree with this, but if I don't understand in the first couple slides what you do, I just forget it. I lose total interest. Some products are very complicated. You know, I mean, and even you can say it's shampoo, but why is this the special shampoo? If you don't explain what you do in clear, non-industry lingo, if you can't do that, I mean, people will just tune out. So please start with what you do. What is your business? You got to trumpet yourself. You've got to trumpet your experience. People who work with you. We need to understand who it is. The people are almost as important, sometimes more important than the product. You know, why are you the person that's going to do this? Especially if you have a competitive industry. Why are you going to be able to beat out everybody else who's there? Financials, I'm going to bear down into those a little bit more later, and I think Christian probably will as well, even more. Competition and target market, I'm going to talk a little bit more about that in a second as well. Customer revenue. Revenue is a way to prove your concept. If you have a complicated drug or something that takes a lot of time to come to market, yes, the angels will come in pre-revenue. But often, it's nice to see that you were able to sell it to somebody who didn't know you before. At least, maybe your sister is a little different, but the way to prove your concept is that you've been able to sell it. It's called proof of concept, and so that does help a lot. And I'll get to the rest of it later. So the one thing is, don't be defensive. If they don't ask you a question, that probably means they're not interested. They're going to ask you questions, and sometimes we try to prevent this in our group. You know, a lot of groups have codes of ethics. Sometimes they will sound obnoxious, challenging. They shouldn't, but they do. Please just try to don't get defensive about it. Treat it as a great question, even if it's not. You're going to get some pretty tough questions. And if you get tough questions, as I say, sometimes that means that they are interested. Sometimes it means there's a problem, but often, don't be offended by it. Executive summary. This is short. It's got to be short, and it's got to be something that will grab their attention. It covers a lot of the major points of the PowerPoint. Sometimes when you apply to groups, they'll use a system called GUST, which will actually produce an executive summary for you. A lot of the groups, does Jumpstart use that GUST now?
We use GUST to manage our documents, but we actually have a form that we like.
From
Okay.
Gust or no?
No, it's a
Oh.
Jumpstart form. Separately.
Okay. We use it used to be called AngelSoft. We use GUST, and if you go to Delaware Crossing's website, and I have cards, by the way, for Delaware Crossing if anybody wants where the website is. It will, bring you through a question and answer, and it'll produce an executive summary. I'm not saying that should be your final draft of executive summary, but sometimes it's a good place to start. And to back up a little bit, I didn't tell you, Delaware Crossing does invest mostly in technology and life science company. We have gone off the beaten track a couple times. We did invest in an alcohol company once. That was fun.
Too many samples.
Yes, we had a lot of samples at the meeting. It was funny. More people invested in that company than in any company, but they invested less money each person. So I think it was sort of the fun investment. There is a new organization that I'm starting to become familiar with called Fashion Vest in New York. If you are more in the fashion industry, you might want to look into that as well, just another thought. And there are a lot of incubators and accelerators, so you can research all of that. You can go to angelcapitalassociation.org, I think, and there's lists of all the different angel groups, and you can see what the angel groups are about. For example, Delaware Crossing, if you're a Texas company, we're just not even going to look because we're a regional investor. So, yes?
I'm sorry. You had mentioned that the internet was the worst way in order to be introduced to an angel investor. So I just want to make sure, going to angelcapitalassociation.org, they're different.
It's a national trade, more like a trade association. There's information. They'll have papers on how to pitch, what is an angel investor. So there'll be a lot of information where you can learn more about the venture capital and angel industry. You can also see a list of the angel groups. I think you have to be in existence for a couple years to be a member. So more of the established angel groups and find out what's in your area. Yes, then if you can manage to go to some conferences, manage to meet some people, rather than just throwing in something on the internet, it does help. And we definitely pay more attention to
If I can just address that.
Mhm.
The whole thing is that when I see an opportunity, a deal, if someone has already vetted or has done some due diligence or has looked at it before, so usually an attorney is familiar with the company, is usually familiar with the team, an accounting firm the same way, or another angel. So referral is probably a best way of getting you to see me, let's say, okay? I usually don't go on the internet searching, because there's so many opportunities that come directly to me and through referrals that I don't need to go to the internet to try to find businesses. So it doesn't mean you shouldn't do it, okay? I don't mean, it's not that, it's just probably a referral or somebody else that gives it to me is better. Goes on top of the pile.
And we get applications from hundreds of companies a year, and this is the sobering part, and as do all the angel groups, or even more than
We look at
hundreds.
about 100 per month.
Yeah, it's a lot. Some of them get thrown out immediately because they really aren't in our, it's a company from Texas who didn't look to see that we only invest in New Jersey, Delaware, Pennsylvania, New York. But it's a lot. And then we pick 1 or 2 a month. Well, we pick 4 or 5 to really screen intensely, 1 or 2 a month to present to membership, and many see more than that each month. And maybe we invest in 4 or 5 a year. But we're a smaller group. A lot of groups invest in more than that. We don't have application fees. Some groups do have application fees. So everybody's works differently.
And let me just add to this, I'm actually on the screening committee for Delaware Crossing. Think of it like job hunting. You can submit your resume on the internet, but it's always better if somebody in the company submits your resume. And to Liz's point, I would almost argue that we have a little, I think there's almost a drought out there. I think investors are always hungry and looking for opportunities to invest. And I could say at Delaware Crossing every month we're like, anybody find anything we like? Well, we kind of like these. Does anybody know anybody? Start reaching out to your network. And who could bring in some companies to invest? Because the companies that we're seeing might not be really what we're looking for. So I think, keep in mind, as much as you're trying to sell your business, there's people out there actively trying to buy. So, and again, it's pretty easy to find. Go to us. You can Google just about any angel group or even VC groups if you're that advanced, and get your application out there.
I'm going to go over this one pretty quick. Business plan. You really need a business plan, especially if you're going to banks. It is just a good practice, I believe, to go through. It makes you really think about your business and what it is. It makes you know your business, strategically where you're going. There are groups that don't really need, not every group requires a business plan to read it when they're investing, but I've heard people say it's not necessarily, it is necessary. I think it's a good practice to go through. But that's a whole seminar on its own.
In Jumpstart, we require a business plan because it
Right.
shows
I
us
believe
that you've
it's important.
thought through the process. And that doesn't mean that it's not going to change in the future. It's just that it means to us that you've thought through the process. You've got the financials. You've got the backup of those financials, market surveys. So we require a business plan to invest.
Right.
To invest.
No, I think it's an important thing to do. If you don't have time to do a business plan.
I have a question about the arrangements you make with angel investors. I have a couple, and at a loss of what do I offer them? Is it a percentage of the company? Is it a partnership? Is it a voting partnership, a non-voting? What generally are angel investor individuals and then perhaps groups looking for as a return?
Yeah, I think, is that on this one?
Am I jumping ahead? Oh, okay,
well, I got
that's
it.
good. Excellent.
Generally, angel investing groups are looking for a series, what they could call Series C or Series A preferred stock. Some take something called a convertible debt. It would probably take me 10 or 15 minutes to explain what that means. But a preferred stock generally means that they're going to get their money back first. And then the question is, if things, it can be participating or non-participating preferred. But generally, they're going to get equity. It's going to be based on the perceived valuation of your company and how much you're putting in. So if your company's worth $1 million, well, let's say if your company's worth $2 million and the angels are putting in $1 million, they're going to end up with a third of your company. But they may get a preferred return back, or they get their $1 million back before the common stockholders do. It's something you should understand before you go to your angels, because if they say, so, what are you offering? And you don't know the answer, and your attorney, who hopefully has some knowledge of the startup world, should educate you on this, or your accountant or financial advisor. But we recently just had a presentation where somebody couldn't answer that question, and it does make her, but she brought her CFO, and then he could answer it, and that's okay. That's okay. Just make sure somebody can answer the question and you've thought about it before you go in.
She froze.
Yes, she did.
What I'm seeing, because now I'm seeing, whoops, okay, stop, that's it, stop. So, what I'm seeing, especially with the accelerator, so I'm seeing seed stage. That's what happens when you talk with your hands. So, what I'm seeing in the seed stage is that it's convertible promissory notes, so it's debt. And the reason is because it's a simple document, relatively simple. It may be a 6-page document, and you can start raising money. It's a note, it's an IOU, and it's got some kind of conditions associated with it. If you want to do an equity round, what happens is that you have closings, you have to raise a certain amount of money, and there's probably 5, 6, 7 different documents necessary to make that close. So when you're a seed stage, early stage, friends and family, you usually probably, it's more of a convertible promissory note, and then after that, it ends up being an equity round or a preferred.
So angel investors are equity round. Angel investors are equity
Usually it's,
round.
yeah.
Usually. Convertible promissory note means that when you do raise equity later, it will convert into the equity of that round.